Well, good morning, everyone. It is Scott Henderson, shooter. It is August 6th, about noon. We're going to do our town hall meeting, review some charts, and then go over some chart requests. Please, at the end of the presentation, please do review disclosure. Let me jump right into it. All right, look at Trade Desk here. Right now, I'm running the anchors at the 42.96 and 81.99. I think this does beat, so the idea was hold it to a little bit right into earnings. So at this point, it's done nothing wrong. That's the game plan, right? Let's look at Fubo. Now, Fubo was solely a revenue game. I think it does head back up to this 618, probably a little choppy to get there, which is one reason I took it as a yield play. Let me jump out to the weekly on this one so we can get our anchors. Even though, to be candid, when I do a yield play, I don't look at my stops the same way. I'm just going to grab another one over here to make it simple. That way, instead of trying to jump around the charts. So just use a 291 and a 367 as far as your anchor. And then, we're targeting that 618 up there. The idea is to give it a little room, because until it breaks below like this 350, I'm not even worried about it. Then I'll revisit it. I have an alert set there. Structurally, depending on how I'm setting up a trade will depend on how I'm managing. I tend to like the trades where I don't spend a lot of time managing them. I put them on, set an alert. I don't look back at it, kind of thing. I tend to enjoy those a little more. All right, now let's look at Marvel. Now we're testing trend support here. A measured stop should be around 72.61, but I'm keeping it fairly tight here. I'm probably not going to stop out on Marvel because I like it to the upside. I like this as an AI play, so at this point, I'm trying to stay in it, so I look at it a little bit differently. All right, now looking at Wolf's done nothing wrong. Another yield play. Coming out to the weekly, see if it's going to give me. One of these days, I'm going to figure out this app. I don't know if it's my age now or just that I'm slow. All right, so we're using a 92-cent anchor and a $4.13 anchor here at this point. We sold to open the August 22nd 450 cash secured puts, and we bought to open the $5 calls. We paid, I think it was $4.97 was the price per share. Now here again, that's just a yield play for me. And if my memory serves me correct, it was about a 92% annualized. I like those because you can't really, even if you get 1 out of 5 of them goes south, let's say, because it's not 1 out of 5 goes south. And the share value is small enough where it's not like an Upstart or an ASML where you get your rear end handed to you when it goes against you. That's the challenge about doing yield plays with larger names, is there's much more risk to the downside if it goes against you. So that's what this again is, a yield play. Now, Monday, I like here. Now, I've got my entry alert I had set here this morning that did trigger. I liked the 240 cash secured puts. Could go a little deeper, maybe even down to 235, 237 if you wanted to be a little more conservative. I think we're going to push maybe to 306. I just like the look of it and how it was broadening and sort of an inverted head and shoulders, left shoulder, head, right shoulder. I was hoping I'd get a little deeper pullback, really to give me a little more conviction. But ultimately, I decided when I drilled down to the RSI that I liked it down there. Roughly once we get a pop off of that 248 was my thinking. Okay, now I want to just cover ATKR. Hopefully nobody is still in this and you were stopped. Now I'm going to use this as my first example for trend support anchors. I call them confirming trend support because I like to anchor them. And I know we have some newbies in the room. The rest of you folks, excuse me for being repetitive, but I want to drill this home. So, our confirmed low is here. Our divergent low is here. Our next divergent low. We want to take our lowest divergent low to anchor your stop. And then you want to walk up the tape as you print these candles. And you want to come and put your alert off of your wicks. As you get another candle, you're moving it up, etc. Because ultimately what happens here is when that trend breaks, right? And I don't know the actual back test number on how well it worked, but I'm going to guess that it's at least 75% of the time right or more. And it may be as high as 85 or 90%. So when that trend line breaks, we don't want to hold it. The most that we want to hold, and the reason that anchor is set that way is the idea or the thesis is to take 50% off and then run a fairly responsible trailing stop equal to 20% of your gain. That's the structure that I like to keep. Now, just to jump off base, I want to go to another name here that somebody had asked me to look at. I'm going to just go through the chart here a little bit. Same scenario. I'm going to use this as my second example for how well confirming trend support works. Okay. And the idea is just, whether it works for me or works for you, doesn't matter. It works. All right. If it works for you, then you should have something in play for your risk management. You have to have some form of risk management on the table. And this is a great example of how trend support worked. Again, so we had our initial general candle, got follow through. We broke out here, back tested that a little bit. Okay, so it was a little noisy. May have gotten stopped out of 50% if you were up on this wick, because sometimes that does happen, right? So if you were stopped out down to 50%, but you weren't totally taken out, now the rule comes into play. Once it breaks back above your lower high or higher high, as the case may be, you can now add a full position back and try and chase it again. You find it's not as productive once you get shaken out, though. That's my general experience. If you hold trend, follow these wicks, you would have gotten stopped out something similarly here. And I'm going to use this as an example. If you went to your first wick, first back test, right, you would have been stopped out of 50% here, and then you would have been taken out on the rest. So then you would have re-entered right here, right? And then you would have pulled your anchor down to where your low was, right? Would have held here. You got a general candle. As soon as you broke above that, you follow the next rule. You break up to at least the body of the general or 50% of that candle. So you would have been stopped out of 50% here, and then a 20% trailing stop on the balance. So you'd have been stopped out again. But you avoided this drawdown, right? Which ultimately gave back this entire gain from the breakout of 96 up to 117. So you basically gave it all back. And that ultimately is what I'm trying to avoid. Okay, so now let me talk about the symbol as long as I brought it up and used it as an example, and hopefully that was helpful. I would say that I like it back towards the 50 fib at least, which would be roughly down here, but I would think that we back test this trend support that I have down here just because it's probably relative. I'm not digging down further on that chart, but my thinking is that it would be very likely with this kind of a general candle, considering we have this. So I see this as an ABC corrective pattern is the thought. Hold on a second, I grabbed the wrong one. So equality could put us way down to the 100 fib down here at 49. I don't want to try and hold that. There's going to be some better looking names out there that don't have this kind of a candle. Now we start getting a basing pattern here, maybe down on the 4 hour, to give you where I changed my mind. Okay, so you have this breakdown. We do have some confirming non-divergence down here on this candle. So we're going to get at least one more lower low. I mean, on the worst case scenario. So I would say probably equality to that. So we, maybe $80 we find a bottom, but the breakout has to get back above this wick at 87.43. And then I would only be chasing either the base of the gap or 50% of the gap, and I'd take my profits, because when you have a gap like this, unless you fully understand the catalyst, this is a huge sell. Somebody just dumped here, and it was likely a fund. So, all right, now today I'm only going to go over our green names because we have such a large list. I think we have 25 requests. So I'm going to go over the names in play. Now, Galaxy, we added a new position back. We'll go to the weekly just to get where my anchors are. 243 and 2040 was the stop prior to this general candle. I would be at least 50%, and we added back right around here. We went long. We sold $25 cash secured put. It was a safe place for us to go. That was my thinking. All right, now Soundhound, nothing's really changed. Same scenario. Yield play, we had the October 15th cash secured puts. Nothing's really changed here. Let's look at HIMS. Now, I'm actually eating these $60 cash secured puts for a minute here. So we have December 45 covered calls, October $60 calls, and August $60 cash secured puts. So, even if those wash, at this point, I have right at 20% of my gains on HIMS at risk. And that's how I tend to structure a trade when I'm looking at that. But I still think we're going to head back up to 85. I think we're on this journey of breaking out. We're just digesting this here, deciding exactly where we want to go. We could even pull back to this trend support down here, and it really has done nothing wrong. Now, we're going to take, obviously, some heat there if it does do that. I mean, because it could pull back to this 31 and then go. So, obviously, they had a little more pain than I would have planned on. But, hey, in certain circumstances, that's going to be the way it happens. All right, now I want to look at IBIT. Again, it's done nothing wrong. Nice flag building out here. I actually like it here off of this 63 because it's sort of symmetrical. If you're looking at just if this is an ABC pattern, but I'm going to pull this out for a second and pull up the impulse and actually draw it according to the count. So and this is sort of my visual on this. Challenging part with IBIT is you don't have enough tape, really. So, structurally, I think worst case scenario is an impulse up to 76. Now, if we come back and we measure this leg here, the assumption is that is a 5. That pushes us up substantially higher, up towards the 1618 at 197. So structurally, that's done nothing wrong. Let's look at JLBY. Now, I would be trimming a little here only because of this wick off. All right, if you're still holding this. It did take us out on 100% of the trade off of trailing our trend support. If you use the 496 and 1665, we noted, actually I started, I think about 2 weeks ago. All right, let's look at SNPS. Still done nothing wrong here. 367.25 is the base anchor, 615.95. Just a nice freaking move from $500. I mean, just a nice move. Actually, I think we had it at 474. So at that point, still hasn't stopped out. If it takes you out of 50%, great. Now on this one, only because of this wick off, I would be trimming as it keeps to hold. Every week, take a little piece off. You're taking profits on this one simply because we're getting too deep on these wick off candles. And, if you look at what's happened in the past with the wick off candle, wick offs, it tends to imply that we're going to roll over. So, and we're putting in our first red candle here. Now, I would not blame you if somebody just took profits here on this entire play. My only hesitation is we're confirming, but then the caveat to that is it's rolling. So I view RSI differently if it's peaking. So whether it's a flushing drive or a peaking drive, right? When it's rolling, it implies there's more buyer exhaustion than if it's peaking. Because basically what you had is you had a huge number of people that were in it, they were chasing it, somebody started taking profit, okay? A bleed is a little bit different. When it starts to bleed, it implies to me that even the people who have open positions are trimming littler pieces. So they're taking profits up here like this is the end. So we want to listen to the noise a little bit when a tape starts to show us that. All right, let's look at Unity. Now we're still sitting on those 30s. I still done nothing wrong. As far as I'm concerned, we can hit this trend support right here from this trending support. And it's really still done nothing wrong. Breaks below that, I might reassess what position I'm at, but at this point, I'm still thinking we're just going to grind and get back to that 618. And all this is noise. It's broadening formation. To the upside, you have test 1, test 2. Typically, you get the third test of the broadening formation, probably be around 49%. All right, now let me go back. I want to go through some blue name. In other words, I'm liking these again. I don't have a position on Lily, but we're going to get to a point here where it's going to functionally work to the upside. It's going to break out. It's, anytime you have a descending wedge kind of look that's this broad, it tends to be pretty euphoric to the upside. I have it measuring to 1,086. So we come down and test this 745, 709 range, or 709 range, excuse me. That gets interesting for me. The only concern I have is this gap. Might fill that gap first. 676, is probably a better price, but it's starting to catch my attention where I would like to get a piece on that. Metro Resources. Now, I've got an entry alert set off of this trend, which basically was based on this wick off. So I used the $33 and then the 44.02 because this is going to bounce. We're going to get, this is a perfect 50% back candidate with the way this tape is. We have this trend resistance area here. Quite often when names don't go when I first post them, because realize that one thing with Elliott Wave is it doesn't give you a time frame that anything. You have to use other tools. So if you look at this broadening formation, right, it's one way to look at this, or you can look at this as just a trend channel, a bullish trend channel, and we've pretty much hugged this as far as a bullish trend channel. Now the fact that we got a shallow back test here, so we have this internal risk line that I have in play, that ultimately is where I would want to set my risk. So I used the 1991 and the 30.04 for taking this long. Ultimately, it's got a target at $40. So It's got some nice upside there. Now BTU triggered here 961 and 1535. So the full size trigger 1549. Target is 2217. So this is in play for this week. I want to go back and visit Bull down to the daily and maybe even the 4 hour on this one. So now it stopped us out because we took a shot here, and I don't know, I actually think I took about a 40% loss on that one. But the anchor now is 1018 and 1305. So, when you have these breakouts and you take your shot, you don't know when the launching pad is going to come. And right here, we didn't quite get to this prior shelf because this is really where 1876 is where the bullish trend really is confirmed. So right now, I like this as another shot back up at least to the 1618 at 1949 from where we are now. Back at AMD because I like this pullback. We closed our position and we're getting a nice wick off. Really, what I'm seeing is a symmetry between the prior leg. So, and I'm just looking at the tape as I'm visualizing this. So we've gotten our 2. So our 3 could push us all the way up to 265. But I think I want to wait and see what earnings delivers. Let me jump over to Big Sky. Now, I like this for a re-entry, but I have some questions. And whenever you see me draw up a chart like this, it's because I'm trying to fully understand the scope of the mounds, really what the symmetry is. And this is very euphoric. The challenging part with a very euphoric 3 is it can turn into a head and shoulders. So this is your left shoulder, this is your head, and you end up breaking down further than you expect, which would be back to about the 382 at 1303. Then you break out, and then you reject price just a little bit higher, and then you dump. So, that it has some concern in the volatility, but at the same time, I'm looking at this firm. So this, it broke above. It's our highest high in RSI. So this is mound 2. So that means we are getting a mound 3. And the most likely trajectory for the mound is going to be following the slope plus about 20% to 35% of what that slope. So we're going to come in and we're going to put in something like this. And I'm just going to do this quick for my speed lines that I have drawn in there. So that is our likely trend support for mound 3. One of these 2 levels. It could come back to this level. But my point here is we get back to this 1593. I like it, except for I don't know that it's going to give it to us the way this looked when I come out to the shorter time frame and look at that count, because we're holding here, we confirmed here, we diverged here, so now we have everything set to get back up into this gap. So your confirmation for breakout is a close back above this 2101. At that point, you want to have a full position size on. You want to chase this one, and ultimately we're chasing that 3 up at $35. Has some nice upside. That's my thought. And then we wanted to look at QBTS, simply because of the look here. It's really done nothing wrong. Ultimately, we break back above this wick, that 1919. We're going to head towards this 618. So it's kind of in play. It's kind of a little late, which is why I don't have a position on it. I like the look. I like the thesis. I like the market it's in. And, just on another caveat with quantum computing, and it was with Shirkle, that guy who went to prison for fraud. That's who. And, his thinking is that the only thing that quantum computing is ever going to be used for is to crack things. It's never going to functionally become a computing process outside of that. And, I have not had time to dig into that, but that actually makes a lot of sense for me with my limited knowledge of quantum, because there would be a reason why that so many of the big Mag 7 aren't funding quantum project. And, because they ultimately see that it has limitations as well. It's sort of my thought. So, all right, let's jump. We've got a lot of names to go through here. SPWR, right or wrong? Is that what we wanted to look at? Now, my problem here with this, and I'm just going to draw an ABC pattern, which is why I didn't spend a lot of time drawing it up, working it up. I'm looking at this as A, B, and C is here, right? And I don't change my mind until we break back above this 190. That's how simple it is, right? All right, now I'm going to go to B. Now this is Barrick Mining. Nice bullish move. I'm going to go out to my weekly so I can get my anchors here. Go out to the monthly. Okay, we're just going to add one. Quick and easy reasons. And I'm just doing this simplicity for you guys because finding out. So just use a 1779 and a 2039. And what that is that's your left anchor and your right anchor to set your trend alert. and what I do is I just set it right in trading view. And then ultimately when the alerts trigger, I'm going back in the morning and look at my alerts. I've got 4 today, and some of those are position trades, some of those are swings, some of those are just Bollinger Bands, because I have about 300 different stocks that I have set here. So ultimately this should break out. We should fill this little gap right here, which is just a little overhead. And then ultimately we're going to head towards that wave 3 up here around 26, 27. So at this point, Brack as a whole, don't, I wouldn't change anything. I wouldn't chase it here. I mean, you could chase 25 calls and they probably work. I'd go out to October or November. All right, CDE. Flagging, beautiful look. Target is going to be 1618 at 1381. Again, I'm going to come in here and give you a secondary anchor. I would use this 772 and just use the body of this candle as your second mark. So use 772 and 808. All right, let's look at DNA. The problem I have is the distance between them. And part of that is because I see this, at least visually when I look at things, stocks tend to like to rhyme. They don't necessarily repeat themselves. But so equality is this potentially, I get really serious at 371. Or if it breaks above this prior high at 1639, gets above there, then I'm long. Then I'm chasing these supply zones up here. And ultimately, the 618 is just measuring this first leg. I mean, obviously, if we go out and measure the next leg up, it pushes up to 64. Next leg up pushes up to 88, etc. So, DNA doesn't have a huge amount of upside if we can get on the right side of the tape here. But I don't see the conviction except for the green volume here. I mean, we do have some dominance in people accumulating here. We do have some dominance, all right? But that doesn't mean it's time. And the challenging part on a tape like this is we don't have that much history on a bullish side to really evaluate. This is what we have. We have two monthly candles, and then everything else is bearish. So the question is, was this wrong in its price release at 450 or whatever that was? I mean, and now we're down to $13. It just looks distorted to me. Now we have confirming here, but here again, I'm going to come back and say visually, I just see that there's a potential that, this is mound one kind of thing to the downside, and realize they come in threes unless it's an ABC. So this is our second mound, right? But there's also the risk that we get a third one down. Reason being is because this is now not an ABC structure, right? If we measure our ABC from the top, I'm going in a little deeper than I wanted to on this, but it's a good example. So this is primary wave 1, right? The question is this wave 3, right? However, this looks like an ABC, all right? Or is this our 3? And then we get this little 4 here to the weakness. And then we come in and we print our 5 somewhere sort of like that cascading flow to the downside. That's sort of how I see that. However, with the price point, the way the tape looks, with the bullish flow that's in there, I do think it's worth having a piece on. And of course, you're going to need to make that decision based on your risk threshold and then just manage that. So let's look at NFL. Now, here again, challenging part for me here is this looks real bearish, looks like a continuation. Looks, when I measure my wave, this is, by the way, an impulse wave can occur at the beginning of an ABC. So the way that I see this, structurally is, even though this is an impulse wave, this is A, right? I'm viewing this as B. So then we potentially could get our C way back down here. So I think at best, this is what plays out, all right? And it builds out a flat. I think that's best. However, where am I wrong? And you'll hear me say this a lot because, obviously this is an interpretation and God forgive me, there's a hell of a lot of user error here at times. And it just, maybe I didn't see it, I didn't review it enough, because ultimately the more time you spend on a name or a tape, the better you become acquainted with the MO of the tape, the motive, where buyers and sellers are buying and selling. You get this feel for the tape. So the more time you spend in it, the more accurate you become. At least that's my. So I'm wrong on a close above 104.36. Now it's worth a shot long. If it rejects price here, close it and get out. So if you start wicking up here and you don't break above there, then obviously I'd be trimming. That's my thought on NFL. And let's look at Costco. Costco actually looked pretty good. Has an add back I would not have a problem selling some cash secured puts on this right now. You can tell everything on the chart. I sort of liked it. So where would I enter specifically here? So we kind of have this trend channel kind of broken above that. So at that point, it's already triggered for starter position. So I would plan on adding above 981.93, adding again on the next candle it pushes, adding again, being at a full size, up here towards this level, just to be quick on time. So full size here is how I would view it, roughly at that 1,006. And it has a potential of pushing up to 1,206 from here if this recovers. However, that 925 stop is a hard stop. Gets below that, close. Don't take the risk, because then there's a good chance we're going to come back to either the 123.6 at 784 or the 100 fib at 712. And that's going to be way much more heat than I would want anyone to take on a name like Custom. So let's look at Microsoft. MSFT. Acting like it wants to roll over here a little bit. Beautiful wick off. Complete buyer exhaustion. 1618 is the most viable retrace back at that demand shelf. However, I'm not totally sold on the short side until this shelf here breaks down. So we would need a close below this 570, which is, it's only 25 bucks from here. That breaks down, we're going back to test this ledge here. We're going to at least test this 471. Weak demand zone here, weak, solid demand zone. Multiple tests. Did we test it? Once. This little wick here. However, if you look at the history of the back test, we had 1, 2, 3, 4, 5, 7 candles on that back. 5 candles on that back. 1, 2, 3, 4, 5, 6, 7, 8, 10 candles on that back. 5 candles, or 7 candles, 5 candles. So we got 1 candle. So in my view, that's not a back. Even though it is, technically it is, but so Microsoft, I think it pulls back. It's worth selling some covered calls here if you have common shares, for sure. I mean, it's definitely worth that. I'm not sure whether you have common shares or not, but that wick off. The challenge here is this doesn't look like it's done to me. This looks like an impulse. So, here's where I have my internal argument. Well, wait a second. This potentially was our 1, right? Then we get this long push, right? So this becomes our 2. And the challenging part about this kind of an impulse is 1 typically equals 5. So if that is the case and that's the count, then we potentially could put in a 572 and then flush there. And the same thing happened. And this kind of noise here sort of supports that look. A little more challenging. The other challenging part is that RSI is confirming. So we're confirming on this red candle, not here. So we're going to get one more high. So there's a very good possibility of 572 print. That's just my 2 cents. All right, ENVX. We're going to have to speed up here a little bit. It's worth a shot. What I don't like, anytime you get this kind of a general red. Now we pulled back and bought it a little bit. But look at the history of these. I mean, and that there's not a lot of candles like this. Now this, obviously, you had your main flush, and this is our secondary flush. So structurally, and let me just go in here and give you. So when a ABC pattern appears, you have your A, right? And then you have your C at 4. And they're inverted, all right? Or at least the inverted look gives me some confirmation. So you get like this inverted S look on your ABC corrector. Reason is because you have these flushing drives to the downside. And then it turns around and you get these peaking drives, right? So even this could be classified as part of that because you got this peaking drive. However, looking at this is an ABC, so I'm saying this is where it is. But when you have this, there you have some conviction of it being a bottom. So if I come over and I steal this and I move this over to our current corrective leg, look at the difference in the breadth. Now realize the breadth of the candle's different, but even still. So let's say this is our A, right here. So then we're going to get a B, right? It's going to come in here. So even if it does push back up to 1291, right? We're going to get a C of something like this that's going to occur on the corrective side for what I refer to as an equal ABC structure, not an elongated or an extended. So now the challenging part here with ENVX is it really confirmed here, but it kind of has this rolling look. Remember I talked about that versus peaking? Quite often that means it's done, okay? When you get these jagged edges, right? It pretty much means it's done because you have some conviction, but the rolling tends to mean that it's over. So in other words, this would be a an ascending triangle to the downside. So that opens up $5 for me as far as the look on that. That's my challenge here. So I would say that, yeah, it's worth keeping a piece on, but it would not be a half position size. It would not be a quarter position size. It would be a starter position size here. And then let's go back to the same question I asked myself a lot of times. So where am I wrong? Well, let's look at this. This is so really at this 1248, reason is I'm going back and I'm looking at the shelf. I'm looking at where we had some history here, right here, right here. We tested that. So this is a clear supply zone that keeps getting rejected. Yeah, I don't know that, the targeted short sellers, that's the nature of the beast of the stock market. I'll be candid. That's a CEO excuse for why he's not, or the stock's not performing. You got to deflect in that scenario. Otherwise, the board of directors replace you. So, I look at that as noise. That's just my 2 cents. So back again, where am I wrong? Close above 1248, then you got a shot going long, and this ultimately becomes a impulse leg to the upside. I see it. It could be, okay? What I don't like is that corrective candle. That's a big candle. It's too aggressive to take that all, but it could be. It could be this. You could get this, right? And ultimately, the target up there would be that $24. So, the key thing with Elliott Wave and how I structure trades is to know when you're right, when to add, right? Even when to oversight, okay? Because there are times to oversight. You don't see me do that a lot in chat, but there are times, all right? And then there are other times to sit on your hands because it's in chop or it's in a zone that's not going anywhere. Well, we know that this has been a resistance zone right here. So it's chop. Everything in this range from really $8 to that 1248 is chop. It's just chop because that's how long we've chopped here. 2022, we've been in this band. We've been here forever. So why would we expect the MO of that tape to change? We need a cap. Well, your chances are you're not going to get and I'm not trying to beat up on ENVX. I'm sort of expressing my philosophy on stocks here a little bit. So that's sort of my take. All right. So let's look at PFE. Now, PFE, I like it back down here at trend support at around 1852. However, I'm wrong. We closed above this 2621. So I have an entry alert set using 3154. Now, this is what I do with my charts, by the way. So when I have an entry I like, for whatever reason, right, I'm going to come in. Well, where do I want to enter? I'm going to set the alert. So I got the alert here using my first anchor at 3154, second anchor at 2562. When that alert blows, then I come back in, I post something in chat and say, hey, I like it here. This is what you do. I took a position here. Settle. All right, let's look at RX. Where I thought I worked this one up. No, I did the fibs. Okay. So, at this point, it really has done nothing wrong. It's in this downtrend. There's not, again, back to another tape that doesn't have a lot of bullish scenario. We have this flat. What I don't like is that we've closed below what was this shelf. This is broken lower. So this wick off shelf here is it basically is broken. So when you have a shelf like that that's broken, it makes it very challenging until we clear that, stay back above that. So I really have no interest in trying this until it gets back above this 715, and then with this wick off, you're looking at these wick offs. So the most likely scenario here is that this is an ascending wedge. And, the challenging part with ascending wedge, it's broken out. If you come down here and take your break. Obviously we did get a breakout there, right? But it didn't follow through. So you want to look at the MO of the tape. What has it done? So you come out to your next ledge, broke out again. You come out to your next ledge, broke out again, right? So you got these pushes. This reminds me of AMTX. Breakout, reject, reversion to the mean, breakout, reject, reversion to the mean, plus some. So that's where my MO changes, because now I'm going to come in and draw something else that I see here. So I'm now looking at this as the distance A and B trough, right? So this is a mount. This is a bearish mount, right? So it's declining. So the likely thing that we get here is we likely get at least one more, because in all scenarios, in an ABC pattern, right, there's always at least 2. In an impulse wave, there's always at least 3. So now if I come down here and say equality to me means we could flush all the way down to a penny stock, all right, with that look, mainly because we've broken this demand zone. All right. So unless we decisively get back above here, have some nice volume here, though, it does have the potential to do that. But again, where I'm right, I like it above that 715 is where I have any conviction to the long. All right, let me jump to INDI. This is not done. I see it pulling back, maybe to 50 cents from where we are here. Too much rejection here in the tape. Yeah, the structure was, I was looking at, this is an ABC. It is not equal anymore. Okay, so this was kind of equality right here, right? We rejected prices. So now I'm looking for it to become at least extended, right? And there is a possibility it could become elongated, 123.6 to the 1382, but let's just say. So it could become, so where am I wrong? I'm wrong, breaks out back above this 509. At that point, then it's worth taking a shot long. Okay, we already looked at HIMS quantum scope. Okay, so we've broken below what we were using as our anchors, the 360 and the 909. We want to wait and see what happens with this RSI here because we're not putting in a divergent lower low in price. It's sort of bullish. Okay, so I want this sort of, and the challenge is the time frame here. So it was 7:25 to 8 of 25. So it's been a month, right? So this structure, and just to be equal on time here, I want to wait and see what this forms, whether we get another low, a little lower low, maybe around $6. And then it's worth trying to take. I think it does hold, but this is total price rejection here that I see. I still see it going back to $18, but I'd rather buy it back down here around 5. That's my thought. Just looking at the RSI structure, I'm looking at it daily. We confirmed this is total rejection, total rejection. Didn't get any divergence up. So there was no conviction with the buyers to push it higher. And that's something you want to look at when you're assessing a tape. All right, let's look at NVO. Now, this I've pushed a little bit lower than what our count was just because of how we've acted, what RSI did. I like it back around 36. Right? And the reason is how aggressive this sell is, right? And the fact that we have no buyers that have coming in here. I mean, a total sell. So I would think that maybe this candle extends this week. I wouldn't be surprised if we see $40 this week, and then we get a third candle. I would be my thinking, just with that structure. However, again, where am I wrong? All right, we break back above the wick of this candle, which is this 49.21. Then it has a shot long. But again, I'm going to say be cautious because in an ABC corrective leg, just, assuming this is our ABC, right? So this is our A. Our B, maybe back to 50%. Then we get our C, which pushes us a little bit lower. So with I'm not as concerned about a $70 stock as I am a $500 stock with something like that because of the difference in the risk metrics. But to me, when I looked at this, it has much more downside than that. So I would be cautious until we break back above that 49.50 roughly. All right, let's look at AAOI. So we've broken what was our trend support, and AAOI has still done nothing wrong because if we take just bringing a new line in. So if we just now tested the wick of what is technically trend support. So here's this rolling thing in RSI. I don't like that. And I'm seeing that in a lot of names. Reason is there's no conviction to the upside. We did put in our confirmed time, but we got like a double top and it kept rolling. So basically this look in RSI has the same conviction to me as this whole mount, because this is structurally, the symmetry is playing out accurate. Peaking drive 1, peaking drive 2, peaking drive 3. We got this huge flush. Chances are what we need is a corrective leg still to the downside. And that makes it very challenging to hold. I think I've said this before on this tape, but that ABC just looks too natural, at least to come down to 296. And that's a hell of a move, $20, if this is going to break down. So that's my thought. Again, where am I wrong? Well, I'm going to use a similar scenario. I'm going to come back to this shelf and say, we get back above this high, which is roughly 23.93, then it's worth a shot taking it long. Then this is just a broadening formation. So this is our drive 1, drive 2, drive 4. Then we're going to get a drive 5, probably more towards a flat top, just because broadening formations tend to do that. You don't have an extended or elongated 5 in most circumstances. So that's my thought on AAOI. Let's look at, we did 4 BBAI. Like the flag on this, measures to the 105th, so roughly $11 looks totally viable here. I'm going to come in here and just throw in, so I would use this slope, that's your risk, use the 58 cent, and then the base of this flag, which is 601. Outside of that, it's done nothing wrong. Good look, by the way. All right, so let's look at Run. I don't even know if I have this one looked up. We got about 7 more names. So, yeah, okay. So Run looks like an XABC here to me. So I get interested about $7, or equality down here at this line. So structurally, if you're going to trade it, try a piece on at 742 and plan to add at $5. That's how I would look at run. Let's look at circle. Now I've reworked my mount. This is just a breakdown structure. Challenging part about a short tape for me is I really can't get a good read, or I don't see it as thoroughly as, for example, DuPont, it goes back to 1978 or 76 or whatever. So, the challenge part is now I'm looking at, hey, what if structures, even though everything is a what if structure, I'm like, okay, well, we rejected price here, right? So the most likely outcome is that we get at least two, right? So, and I'm being generous when I say this. If we come down to this 122, we should get it back. However, equality really looks like this. So at least from a structural standpoint, and what I'm basically saying is, even though we don't have this in the tape, I'm saying, okay, well, it looks to me like this would have been our impulse structure, right, in the tape, because that's all I can do is fill in the hole and use the history of the tape. So, an impulse structure has three mounts. So we're looking at this as one whole mount. Right? So the corrected mound structure is similar in equality. So now that we have this kind of breadth and that corrective leg, I'm assuming we get one more. So I think there's a possibility it pushes back to $100. Now this is going to be a little more elevated. So where am I wrong? Well, your last shelf. So it breaks back above 193.33. Then it's worth chasing that long. And now measuring that is going to be a little distorted, but we're going to bring it in there just for your reference, because whenever you have that running flat kind of look, you still use your fibs to measure it. So the challenge here, so your first target is 205. So even if you break above this 193, you've got, what is that? $12 to the upside potentially, and then it likely rejects and rolls back over. It still puts this in. So I see this as a impulse to the downside. I don't know. Some days when I think aloud, so there's a good chance we get a bounce to that 618, and then we put it in like that. So if you want to chase that piece, if you have some conviction, above 170 is probably above the 236, because that really is the first bullish. Assuming the breadth of this leg. All right. Hopefully I answered your question on that one. I got a little wordy. All right. Let's look at A-Lab. Beautiful thing. Huge general candle. No wick off. Confirming an RSI. It is going to measure these I didn't get to and working up. But come in here and just post this right there. Your target is at least the 1618 here, assuming this is our mound 1, putting in mound 2, right? Peaking drive 1. This is peaking drive 2. Peaking drive 3 could push well upwards of 269 here. Beautiful look. Hold. Try and keep a piece on there. Coin. Now we're hitting what was our internal trend support here. That's the way I was looking at it. I'm just looking at the tape as I'm looking. Broadening. Don't like that. So we've got this kind of look. 1, 2, 3 tags of the ceiling means we head back to the floor. So coin is going to retrace. That's what it looks. Where am I wrong? Breaks back above that 349.75. And we confirmed here, but didn't put in a diversion high. Notice that. Or confirming. Okay, let me just clarify that for those of you who don't. Confirmed is a lower low in price and a lower low in RSI. So at this point, this is a confirmed. This 5922, this is a diversion, which is a lower low in price and a higher high in RSI. Okay, so this is confirmed. This is a diversion, right? Now, I'm going to come in and say, you have confirming highs, right? In other words, it's a higher high in price, but it's not the highest high on the tape. So it's not a confirmed high, it's confirming. So this is our confirming high. This is our diversion, but it's not confirmed. This is a diversion. So in that, you still have the distortion that occurs from the divergent, and the most likely outcome here is going to be a back test to 168. MSTR. Now, I don't see that in Bitcoin. And Monster is a better structure, I think, for Bitcoin at this point. Except for Kirk really doesn't like it. So I've got an alert here at 370.29 that pullback. So I've got it for an entry here. However, when I look at this cascading look on the candle on the weekly, my thinking is this is an ABC. So I'm going to say, forget that idea for the moment. So this is going to be at least this probably. So we probably come back and back test this gap, right here at the 281. I would rather buy it there. So I changed my mind, right? So I would like it here, roughly 370. I'm going to say I'm wrong on a close back above 404.42. Roblox, done nothing wrong. Forgive me, I'm going to clean this out. I have so many different versions of this chart. I am trying to just get all of these done. So, I would be doing at least 50% of this candle, and I probably would go right to the wick here. As far as my risk, holding it, it's really done nothing wrong. This is a nice flag, extension on the flag, nice pull. hole. I mean, structurally, this is a trend that doesn't look like it's ready to break. Let me come out to the monthly. I want to see if I can get a decent view on this. So, we are now above, we've tested above those highs. We are confirming. So we are looking for the distance between here and here, which we have not. I mean, I guess you could say this is the back test stuff, but we probably get another candle. My finger's wearing out, guys, gals. So, we're looking for a push to at least 178 here, and we're likely going to get a third. So it could push all the way up to 245. Let's look at Clean Spark, CLSK. Beautiful snap. Again, trend anchors work, keeping us out. It's actually ready for a re-entry, looks to me. We have a flush without divergence, which is quite often the case in peaking drive 1, 2, 3. So this is a head and shoulders, but it didn't take out the low, so it technically is not. So this is probably A, and we're going to get a C up here, A, B, C. I'm just looking at the structure. Doing this in real time is slow. You have to forgive me for that. It's how my mind works. I use a lot of different tools. So I would think that this is an ABC here, just on this look. So we got this A, B, we're going to print a C. Right? Forgive me, I'm using the wrong tool, but that ultimately is my thought. Actually, I like it here at, $8, $9 cash secured puts makes sense here for me. My conviction comes in just from the look of this tape where we've held trend support, how symmetrical that was. And then it stepped up, and I'm just going to do this as, quick, hey, why I like it. So now we've stepped up to our next low, right? This held, it's above it. Right? So it should step up again. So our next pullback should be similar in distance to this. So when we get up here, our next pullback should go up here. So we should not get back below 1184 after this next breakout. So even $12 October, November calls looks decent here as well. I haven't looked at the actual options, but that would be my thinking. I like the way that one looks. IIPR. Now, if there are any other names I missed, make sure you post them. So we have broken below divergence. Hold on, I gotta look at this. I haven't looked at this in a little while. I don't know, it's only been a couple of weeks, but it sure looks like a long. Nice demand zone down here. It's a little broader than what it's showing there. Well, it's just a little broader. Tag of that would be beautiful. Absolutely beautiful for a spot to get long. Would be. Not much risk difference between 51 and $38, though. From a cost to average in standpoint. And I want to go down and look at this. Only thing is the distance. It's going back here. It's going back to 40. And the reason, going back to my peaking and flushing drive. So we have our first corrective leg, right? It's an ABC. Whether I measured it correctly or not, I'm just, getting rough here so I can express what I see. So this becomes the flip. And it's going to come right back to here because this leg should be similar in distance to this leg. And it should theoretically put in a lower low in price, higher low in RSI. BRKB. There really is not a lot here until we get down here. So, it's potential back down $3,000. That would be a huge recession if this happened. We are confirming on RSI on the weekly. We're diverging on the daily, diverging on the 4-hour. Well, I want to get a fib on this. Close below the 78.6. Next primary target is 150 fib at 798.32. Where am I wrong? I think I've been pretty consistent with that. That was something I wanted to add to my meetings. All right, so above 9,100, I'm wrong. To the down. Outside of that, I'm going to stick to it and say my target is at 7,900. I think we go there. 150 fib right here. That's my thought. Need a lot more volume than what we're seeing here. We need this kind of volume, I mean, notice the substantial difference in the volume. I mean, we're way the heck down here. I would say the mean is up here. So we're about a sixth of what I would look is the mean volume where we've got these pushing volumes in it. I mean, even though down here, there's quite a little volume at this level right where we're at. But we don't have a tremendous amount of volume at this point on the tape. PASS. Let's look. Pan American Silver. I think silver has a lot of upside. I think a lot of commodities do. I don't like that rejection at the 618. I'm looking at the noise here. Got this low. Now this is more of an ABC. We're just going to count it as an ABC simply because I want the distance. Like I've said several hundred times now, every tape has an MO. So probably a pull back to 24. And then I would think we head up towards the 100 fib a little above that. Far as the look. With that in mind, I'd probably give this a little more room to give it your wick trend support. I would, depending on what your entry is. Obviously, you're in charge of your own risk. If I was in it, I'd be trying to stay in it with that look now at this point, because my thinking is that we continue to the upside. The only thing that really concerns me is this here. I don't remember not knowing what that was in 22 of 20, but we gave that whole move back. So we gave a decent push on this. So once we start getting this kind of noise up here, we start seeing this, I'd be taking profit. Right now, it's still bullish. We're still peaking. We don't have these flushing drives. So that's my thought on that. All right, ladies and gentlemen, I'm going to call it a day. Great trading. Until next time, of course, you like my work, please like it and share it. Make sure you follow me on Twitter at Swing Trade Note, and just encourage folks to follow me if I help you out with your trading or investing. That's why I'm here, folks. Until next time.